Hi, welcome to the Market Alert for Wednesday, the 10th of August 2016. So yesterday afternoon the market was trading in a very narrow range from the open. You can see from the low to the high there, we're just 48 points, and that's why I sent a note out to say, look, forget today, because there's not enough momentum to actually move prices to gain any sort of profits, and that's precisely what happened. As you saw in the evening session, the market gave a sell signal. The market then proceeded to move lower, but you can see it didn't quite get there, and then the market reversed, giving a small loss on the first trade of the evening, and then the second one also. You can see how desperately quiet it was before the market turned around and moved lower. Tuesdays can be a funny day because Monday factors in the weekend news. Tuesday then really is waiting for news, and if we look at the daily chart, you can see how quiet things have been over the last few days. There is absolutely no volume in this market, and as I said in yesterday's, and at the cost of repeating myself, we are in the vacation period at the moment. Also, politicians away, apart from the US, of course, where they're campaigning for the US elections. But other than that, you see how desperately quiet it's been for the last 2 days, for Monday and Tuesday there. And again today, the only thing that's going to move the markets at 3:30 p.m. is the crude oil inventories, and these are forecast to come out at minus 1.3. If they do, that will boost the market to the upside, or in theory, or in the old days, that's how it used to be. But somehow these days, good news sends the market down and bad news sends the market up. So I don't know what's going on there, but that seems to be the pattern at the moment. On other news, we've got Deutsche Bank is moving higher. It put in the low of 1106 last week, and since then the market's been moving back. Got a bit of a bounce going on in there, but when you look at the longer term, it's not much of a bounce at all. You can see that we just got this sort of short-term dead cat bounce before the market resumes and moves to the downside. It's one of these curious things, actually, that during the summer, it's amazing when everybody clears off, i.e. world leaders, political leaders, bankers and everything else, then the markets are sort of fine, sideways and whatever, no matter what the news. And then as soon as everybody comes back, the markets have moved on all of the bad news, and then things start falling apart. So quite an interesting thing that happens, and Christmas is the other time, of course, when that happens as well. We had the US interest rate increase before Christmas. Nothing really happened. 31st of December, the markets day before New Year, and then we saw the markets falling sharply during January and February. But again, if everybody had stayed at home, it would have been fine. So it's an interesting thing that actually happens, and a pattern that is again very predictable. So during the next couple of weeks as we go through August, then we can expect more or less what you're seeing at the moment, unfortunately. The implied volatility is at 925, and again you're seeing this massive drop off in the historical volatility, which is precisely what we wanted to see, and hopefully sooner actually, but it took a moment or two. Whether they've changed the calculation for this or no, I said that before. But the good news is that the two are now back in sync. It'd be nice to see the blue line below the yellow line as well, which again is generally a catalyst for a move coming in the market. Right, that's it for this morning. I will see you in tomorrow's reporting. If the market's doing nothing, there's no point in having losses when the market is trading sideways. You're far better off keeping the capital reserved and then trading when the volatility picks up. That's again part of the discipline and psychology of trading. That's it for now. See you in the next one.